Good afternoon. We've got quite the busy week. Not such a calm week here before the Fed storm that's coming up next week. So we're going to break down what's going on this week, but also a little glimpse into what is coming for the Fed on next Wednesday. My name is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal every Thursday is to bring to you the market news, data, trends we're watching, and hopefully weed out a bit of the noise along the way here. As we get very close to February, as you might imagine, we've got a lot in the spotlight with the Fed coming up. But also, even ahead of that, as we gear up for earnings and deal with some housing data, we've had kind of a choppy market lately. So we're going to break down what's going on there. And then make sure you stay tuned to the end. We've got a great question from Mary this week around the updates on some state taxes here in Washington State that we're going to break down. So let's just start with where we're at, obviously, before we start looking into next week. So where we're at, we've got lately we've had a lot of bad housing data come out over the last few weeks. Pretty negative data from that perspective. Now, keep in mind, here in Washington, it may not be quite as bad, or depending on where you're at, quite as bad as the rest of the country. That said, these data points from the rest of the country are looking pretty negative around housing. So we had housing starts, existing home sales, building permits, all showing signs of decreasing even further. We are Thursday, January 26th, and we are really moving heavy into earnings season. So we had Netflix, I think late last week, we had Microsoft early this week, and get ready because next week we've got a lot of big names coming up with Apple's, Google's, some of those larger companies, larger tech companies, especially that make up a huge portion of the S&P. Back to this week, I want to share a little bit. So first off, we've had a bit of a choppy week here. On Monday, we had markets down quite a bit. Markets were down big on Wednesday, actually, at the open. Quite a big drop on Wednesday, and very quickly kind of recovered a lot of those losses, ended up closing pretty nearly flat, actually. So we've had a bit of chop come back to the market recently, which is new, right? I mean, leading up to this point, if you just look at year to date, which paints a very rosy picture, it doesn't tell the whole story this early in the year. But if you looked at year to date, the markets look great. Markets had picked up quite a bit. At the end of the day, when we've hit some of these high water marks, similar to where we are now, it hasn't changed the story. I mean, the high water mark, we've been in this range for about 9 months since going back to March of last year. And the high water mark that we're at now, today on the 26th, is really no different than it was, last month, the month before, the month before. That said, we are moving into the Fed decision on next Wednesday, and more importantly, probably the press conference, which is going to be huge, right? A lot of what we see every single month, going back to this range here, is that the Fed shares what they're going to do. It is very hawkish, in other words, very negative. They're going to be aggressive, and the market hates it. Market pulls back, and then at some point during the period in between Fed meetings, market latches on to some sort of data point. In this case, it's been a lot of jobless claims and jobs data that they've been latching onto, as well as, to be fair, inflation slowing, the rate slowing. That doesn't mean decreasing, but the rate of inflation slowing slightly. And so there's a lot of speculation that the Fed may pause or slow. Now, they've been clear that they don't plan to decrease rates in 2023. So this next meeting on Wednesday the 1st is going to be very important to see if their tone changes at all, as some of the data has shifted a little bit, at least in the short run. And I guess, I'm curious your guys' thoughts. So as we head into this big earnings season, in addition to the Fed, but as we head into this earnings season, one of the things we're really watching closely is companies' guidance. And I'm curious your thoughts as to whether you think that the companies reporting will start to share stronger guidance in the times ahead, or a little more concern about what the environment ahead may bring. Personally, I believe that it's going to sound a little grim. And I think that's kind of expected. So I don't think that's going to throw the market off necessarily. But, as we move into the impacts of rising rates and all the things that have been going on, there's some headwinds for sure ahead for the economy. But remember, that's looking backwards, and what we're talking about for earnings and guidance is looking forward. That doesn't necessarily mean that the market's going to pull back on that news, because remember, the market typically is pricing in some of these assumptions ahead of time, right? Now, coming up next week, we have PCE price index, so some more inflation data, jobs week, the Fed, and earnings. So, we're piling it all on next week, so get ready. And just real quick before we jump into our question of the week, what I do want to touch on is today's GDP and initial jobless claims. So GDP number today came out at 2.9%, which was actually even higher than most had expected. So, we've seen the markets, I think, sort of kind of like it, but nothing extreme. And I think what's important to remember is that, again, this is looking backwards. And as we look into earnings and guidance and things like that, we'll be hearing a little bit about what companies are watching looking forward as well. So kind of keep an eye on that. The GDP number was good to see. It's higher than expected, but at the end of the day, I don't think very many expected a lot of the slowdown to work its way through until probably into this year, which is similar to how we feel as well. Also, we had initial jobless claims come out today. So second week in a row, quite a bit lower than expected. This week we had 186,000. So does this open up, the path for the Fed to be hawkish? That's the weight that we're kind of toying around with, right? I think that it shows that the labor market is still strong. But next week we've got jobs data coming out for the month of January as well. But again, biggest thing is the Fed path. So obviously what we'll be paying attention to on Wednesday is not just the Fed decision, but really what Fed Chair Powell shares about the path ahead in 2023. Let me know your thoughts. If you want to comment below, I'd love to hear what you think as far as what the Fed will share in the Wednesday meeting, whether they will share a similar tone, whether they will be a little more standoffish as far as potentially decreasing rates in 2023. Just let us know below, and we'll come back to that and kind of update next week based on some of those thoughts. All right, let's move into the question of the week here this week. Again, a great one from Mary, which is basically about Washington state specific taxes. And there's been a lot of news about this, obviously, over the last few years. Most recently, there's some information that Washington is trying to implement a wealth tax now as well, which is a new thing in this scheme. Now, I think that's a little further out. There's a lot more to address there, so I'm not going to spend a lot of time on the wealth tax yet. It looks like that's going to be a lot harder to get through. We'll come back to it if we see some progress there. But what I do want to spend some time on for Mary is twofold. Is number one, the long-term care tax, or the CARES Act, that is supposed to take place coming up in June, I believe it is, July of 2023, and the capital gains tax. So let's start with the long-term care tax. So basically, for those who remember, this was enacted a ways back. It was actually supposed to be in effect in 2022. We were supposed to basically have this payroll tax through 2022, and basically, go to fund this CARES Act for some long-term care type of expense funding. Now, here we are, January 2023, and for those who, have been following this, it was pushed off until, I believe it's July 2023. That is still the case, and quite frankly, we haven't had any updates of note. So technically, this is still supposed to go into effect in July. At the end of the day, with no updates on this and a lot of controversy still surrounding it, it's maybe likely that either it changes by then or they push it back even further. But technically, come July 2023, we're supposed to start seeing these taxes being deducted from our payroll. So we'll keep you posted as we find out a little bit more as we get closer. Unfortunately, there still is not a lot of guidance, even though it's really not that far away at this point. But again, we will come back to it. Second thing is the capital gains tax. And what I will share here is that basically the capital gains tax has been fought and really been on a path to the state Supreme Court from day one. Now, this week, they started hearing it in the state Supreme Court. So this will be really important to watch. I'm not sure how long this will take to work its way through the system and get through the courts, but this week they started hearing it in the Washington State Supreme Court. So the capital gains tax was supposed to be an additional tax on gains above $250,000. Again, whether that holds up or not, we will see. The argument is that this is basically an income tax, and so that's why there's been some fight around this. So we will keep you posted, but for now, the big update is that it is in the state Supreme Court, and they are hearing on this case right now. So we may have some updates sooner than later. We will keep you posted from here. Okay, we will end there. Lot to digest here this week, and believe me, even more next week. Again, we've got inflation data, we've got jobs week, we've got earnings, and we've got the Fed all in a kind of a jam-packed week to start February.